Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. It's a subdued day of trade for the markets, and the Nifty trades around 11,400. PSU Banking Index is the top sectoral gainer. Weakness in the rupee continues after the trade deficit widens to a 5-year low. Kotak Mahindra Bank is the top loser on the Nifty after the RBI rejects the lender's stake dilution plan. And Jet Airways gains as much as 4% after Bloomberg reports that Blackstone is in talks with the airline to buy stake in Jet Premium.
Well, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and the markets have weakened a little bit from where they were about an hour ago. So we have come back or pulled back a little bit, pulled down a little bit from near about break-even levels at around 12:31 p.m. The Nifty Bank too has come off about 0.5% or thereabouts. It was about 0.3%, so some bit of weakness that's percolating on that bourse as well. And the mid caps and the small caps, which are marginally in the green, by the way, are just about slipping into the red. So Europe's open, and we have had some bit of a pullback. Actually might do well to just showcase what the European indices are doing right now before we talk about the heat map and our own markets. Europe 0.5% or higher, no alarm bells as yet, but half an hour into Europe opening, we've had some bit of a pullback. What's happening on the heat map? Pull up the Nifty heat map. When we started off, it was a sea of red. It's right now almost even Stevens. Yes, it is around even Stevens. Kotak Bank is the top loser. What we can see is that on an intraday basis, some of the commodity names have recouped some of the losses. So while Vedanta and Hindalco are still in the red, they were a lot lower at the start of the trading hour. Z corrects about 3% in trade. HDFC, the big boy, putting a little bit of pressure as well. It's a heavyweight, and between HDFC and Kotak, I would reckon these two would be the top two contributors on the index in the session today by terms of weightage. What's done well? The momentum in GAIL continues. Good results. 3 days in a row now. The stock has gained and gained quite strongly. And IT exposed companies or Rupee exposed companies, so IT and Pharma, by and large, are doing well in the session today. Everything from a Sun Pharma, which of course a bit of a feel-good factor continuing on the results, but Dr. Reddy's too is doing well, and large cap IT by and large seems to be doing okay. Just a very quick detour into a couple of key trends at the mid-cap end of the market, stocks which are doing well before I hand it over to Agam or what's happening in the more liquid universe. So key pockets of strength today include a Jet Airways, as we said in our headlines. Bloomberg News that broken yesterday, of course, that Blackstone is in fray to acquiring a stake in Jet Privilege, the loyalty program, and that stock is up about 3% in the session today. So one is Jet Airways. There will be some result reactions and some stock moves that we're seeing. So paper stocks by and large seem to be doing okay. Large, mid, small, everything has done well. And remember, this pocket has done well ever since ITC's numbers came out, and in that the paper division did well. Since then, we've had a number of days wherein the paper companies have done very well for themselves in trade. So this is one more pocket that seems to be doing okay. Last but not the least, there are companies, of course, which are getting sold off, and some key prominent names which are trading close to fresh 52-week lows include a Mahindra Holidays and a Kajaria Ceramics. Ragam, what are you spotting?
Well, we have seen some traction when it comes to the futures space, and let's start off with the Nifty futures at this point in time and see how we're seeing development, when it comes to this open interest. So about a 3.5% increase in OI there, and the underlying declining by around 0.3%. Coming down to the Nifty banking futures, and that's where we've seen a little more traction in comparison to the Nifty, and we're seeing about 5.5% increase there as well. The Nifty banking index declining by around 0.5%. Let's take a look at the India volatility index as well, and that's where we're seeing a rise of around 3%. This is largely on expected lines, not too much to speak for, considering we are seeing a little bit of weakness in the benchmark indices. That said, when it comes to your changes in open interest across your different options, well, it is the 11,400 and the 11,500 calls which are seeing the most amount of writing, considering the little bit of weakness that we're seeing on the benchmark indices. Let's pull up stock futures then. And among the first ones, we do have Balkrishna Industries, which is seeing another 25% increase in open interest. There's 3 straight days of gains for Balkrishna Industries. So a substantial amount of longs building in, now at around 1400. Besides Balkrishna, we have a lot of traction in Mindtree, along with a lot of these other IT companies in the mid-cap space which are advancing in trade. GAIL is the other one, continuing its advance upwards. 15% added in open interest at this point in time, so longs building up there. And finally, we have Equities holding. This one, however, is on the losing end. We are looking at a decline of around 2%. Another 18% added in open interest. So overall, well, more gainers than losers now, Neeraj, at this point in time, at least as far as the futures and options space is concerned. But the benchmarks, some concerns still there.
Yeah, marginal downticks in the session today, post-Europe, a good opening as well. But on that note, let's talk about what the overall sentiment on the market's looking like, and more importantly, what about specific pockets post this earnings season, the winners and the losers as they stand in the views of every individual brokerage. Rahul Arora of Nirmal Bang Securities with us on the show with his thoughts. Rahul, good having you. Thanks much for joining in.
Thanks for having me.
You know, yesterday we were on a break, but across the EM universe, there are actions being taken. Hong Kong intervening on the peg, South African markets off about 30-35% from the recent highs that they've done, but 19-month lows. All know what's happening to Turkey as well. Are you, when you advise your clients, slightly uncomfortable about where we are perched right now?
Extremely, Neeraj. I was uncomfortable when we crossed 11,000, but at 11,500 it's looking a little lofty. I think the one point, Neeraj, I think a lot of people are missing is they're buying too much into every result that's coming out. And the reason I say that is, you see, demonetization happened in November 2016. And the effects of it were felt for the better half of the first half of calendar 2017, and then you had GST. So this is a very strong base effect of calendar 2017, which you're going to see in calendar 2018. The bigger call to take is, once your earnings have normalized this year, on assuming nothing else goes wrong domestically in terms of shocks, what are the FY20 earnings likely to look like on FY19? I think those would probably be the normalized earnings, because a lot of FMCG companies are doing extremely well, volume growth for auto companies, durables, everywhere where base was depressed. I think the mistake analysts are making is projecting these numbers out to be consistent numbers. And I think somewhere we run the risk of downgrades in earnings in FY20, was assuming this to be a normalized year, and hopefully the rupee doesn't get much worse from here. I mean, our own economist view is about 72 for the year, so we're okay, we're within that range. But if it breaks that, then we'll have to reassess. But I think all things equal right now, with the rupee even going to about 72, I'd be very interested to see what the projections or how the earnings in FY20 pan out over FY19. And in our studies in our universe, I think the market is severely overstretched from that parameter. Not to say that there'll be a correction, because the flows are still pretty strong. The days DIs are selling, FIs are buying. The days FIs are selling, DIs are buying. You've never had a consistent sell figure from both sides. So, I mean, it's great for business. There's no complaining there. It keeps going higher. But yeah, I mean, you know, there's just been a handful of stocks, about 15, 20 odd stocks that have lifted the Nifty over the last 1,000 points. Would I personally go and buy any of those stocks today? I wouldn't, so I can't make a recommendation to do that. So I think it's not a bad idea to take profits. But that being said, if the Nifty goes to 12,000, don't hold me to it, because the flows are really strong. But fundamentally, I'm finding it very tough to justify.
But there are no triggers either at this point in time. Let's leave aside the earnings, because as you already said that the ones which have had steady earnings, they are rising even higher, and there's no, irrespective of valuations. So what will those triggers be should we see a correction?
So the main thing that we look at is a price to earnings multiple. So eventually whatever else happens around that will normalize to earnings over a period of time. But I think as we get into the back end of the year, 3 months from now, the country basically will be in election mode right up till May next year, because I think November, December, you have 3 key states that go into elections. So I think that could be an interesting short-term phenomena for the market, depending on which way that goes.
Right.
I think the rupee could land up becoming an important trigger if it sort of breaks 72, is our own assessment. You've had the inflation numbers cool off a little bit, but I think if you get another interest rate hike before the end of the financial year, I don't think the street would take too kindly to that, because when we speak to a lot of people and you even look at the bond yield, I think it's by and large discounted that for the rest of the financial year there will not be any more rate hikes. So I think domestically interest rates and rupee still have a role to play, but I think the dominating factors, not immediately, but maybe 2 months from now until May next year, could be domestic elections and the way things play out.
Right. Interesting. Rahul, so let's work with an assumption that the numbers that these consumer companies are cranking up in part also have to do with the low base effect. And let's assume you're looking at FY20 numbers right now to figure out if the numbers are getting normalized or not. Where is it that you are skeptical? And now I want to start off with specific pockets, because if there are two pockets that impressed meaningfully, one was consumers, by and large across the board, they did well. I'll disregard the auto companies out here because they had a shabby quarter. And the other one was by and large financials. You can argue that Kotak and HDFC amongst the premier names that disappointed, but that could be one-off quarter. They'll probably come back. So two specific pockets which did really well. And I want to talk about those first. Consumers, where are you skeptical about the growth numbers likely to taper off, or question marks over those numbers lasting into FY20?
So, Neeraj, I'm actually skeptical in terms of the price appreciation on the entire sector. And I'll just put into context with one stock. Under my previous FMCG analyst, when I had him, we had a sell call that we initiated on Britannia at 700 with a price target of 500. And then when my new FMCG analyst joined, it's just a change in perspective. He looked at it differently and we gave out a buy call. Incidentally, the stock's up about 50% from that buy call as well. The point being, our last report on Britannia, we have valued Britannia at 55 times FY20's earnings. So then you ask yourself the question, if a domestic FMCG company has reached those valuations to justify just about a 15-17% upside to make it a buy call, what are you then going to give Hindustan Unilever, Nestle, Jubilant Foodworks, etc.? Because traditionally they go at a premium. Gillette is a monopoly. So then you sort of start going into the land of the absurd, because you'll probably start valuing Nestle, Lever, etc. at 65, odd times. Gillette, because it's a monopoly, will probably hit 70 times. So these are very absurd kind of numbers that you're talking about. For companies, I agree the return ratios are very strong. Lever has 100% ROE, ROC. In some cases, the return on invested capital in a lot of these companies is 100% plus. And for most others, will be between 50 and 70, and you don't get that in any other sector in India. So that point is well taken. But for an 18-20% kind of operating profit growth, I mean, the question has to be asked as to what are you paying? I don't think the volume growth in FMCG is going to, surprise you to that extent. The best way to look at it is about 10% is mean. In a good year, you'll probably get closer to 15%. In a bad year, if you have monsoons like you had in 2014-15, it could be low single digits or even zero. So if you're working with about a 10%, you take about, say, maybe 3% on pricing, and then of course all the FMCG companies are premiumizing. Net of all that, even if they have to cut down on ad spends, I don't see how any company in FMCG is going to grow more than 20%. This is a little breakdown of it. So what is the price that you're paying for it? There are companies that are losing out. I don't think Imami is taking the right steps, for example. I've been a huge bull on Colgate. It's disappointed me thoroughly. I mean, 2 years back, you had told me that the market share would be closer to 50%. I wasn't ready to take that call. I have personally gone wrong on it, but I still think they're behind the curve. Dabur is another one, even though they've gained some amount of share in oral. And to your opening point about currency headwinds, you mentioned a lot of markets. Like Godrej Consumer is an Indian multinational company. I mean, they have so many acquisitions in Africa. These companies are going to get increasingly very tough to track for an analyst. So there are pockets in FMCG where there are concerns. I would still say if you have to be in this sector and if you're holding stocks, you still rather be in a Britannia, Lever, Nestle. But, to come out and initiate coverage today, if some analyst is trying to do it, it's very, very tough. Banks, though, is a different kettle of fish because, a lot of these have gone to...
financials by and large, not necessarily banks. NBFCs
I think, very well. So I'd probably look at companies that are between 2 and 2.5 times price to book right now. The potential to go to about, say, 4 times. Because the way so I think you can look at names like RBL. I think it's a very strong franchise. It's one of the few franchises from the non-large cap ICICI, Axis, etc. that has built a very strong credit card franchise in India, and I'm surprised by the rate at which they've done it. And so the fee income is very strong on RBL. In fact, our own assumption is they should be growing their top line and bottom line compounded for the next 2 years in excess of 30% with a 5% reduction in cost to income ratio. So that's coming to you at about 2.5 times. They probably look like the next sort of pan-India player to me. That would be one. The other is probably something like a City Union Bank could be an interesting play. Again, not overtly expensive. If you extend it further to beyond banks, as was your question, I think Ujjivan is an interesting name that sort of comes to mind straight away. And maybe just in one of the smaller names, a Karnataka Bank, where I think the return ratios are starting to improve. The worst is behind. Management commentary was good. So I think if you look at it across the board, there are definitely pockets, but it's hard to make a case for some of the larger ones to keep doing well. One jack of trades could potentially be ICICI Bank. I mean, you don't know what's going to happen with the management. It's had a huge time and price correction. But, I often talk about Dr. Reddy's and ICICI Bank in the same breath because these are two large cap names where if things go right, my sense is people would be surprised with the kind of price appreciation you could get. I mean, these stocks would be up 40-50% in a year. And then fund managers or retail investors would wonder why were we not overweight. So there is enough option value in ICICI Bank and Dr. Reddy's. That's probably the only financial name where in the large caps I would be. If it's a brave call, it's a high risk, high reward sort of a trade. But if you have the gumption for it, why not?
All right. Well, I'm looking at the pharma index right now, and it's certainly underperformed the Nifty on a year-to-date basis. There are a handful of names which have advanced to a certain extent, but they're still behind the curve. However, there's some positive news which is starting to come in, merging in the index. What is your view here? Is it out of the woods?
We've been positive on this sector for a while. Of course, the news flow around Sun Pharma of late has been helpful.
Right.
There's been some clarity on Halol as well. So to take the point on Dr. Reddy's forward, you saw what Suboxone did to their numbers. It was a good run from about 1900 to about 2200. I think if there is some resolution on Srikakulam and Duvada, that could be a good bet. I think Cipla is a good hedge on the US market and on the currency.
Right.
I think that's a fairly safe stock. It's probably the safest of the pharma stocks to play. The other stock that continues to surprise me in terms of the approvals, and yet their R&D is sub 5%, is Aurobindo Pharma. There was a time I remember the largest fund house in the country owned almost 10% of it, and they made so much money that they started selling out of it, and the shareholding got fairly diverse after that. But it's they continue to get approvals. There's not been any major plant issues on Aurobindo. And if you look at most other pharma companies, their R&D as a percentage of sales is anywhere between 8 to 15%. Right. And this guy's managing to do it with less than 5%. So I think the operating levers are pretty strong. In the mid-cap space, we like names like Natco. And another high-risk, high-reward kind of a trade could be Jubilant Life Sciences. Sure. So I think on the top, in the large cap and the mid-cap space, there is definitely opportunity that we see in pharma. The entire valuation of the sector is sub 15 times FY20 earnings. So I think to that extent, there is a bit of valuation comfort as well.
All right. Interesting. Rahul, one call that surprised me, and there are many which do, but this one particularly from your stable was on multiplex companies, Inox Leisure. And I remember when the note came out, there was a comment that came in that, yes, we are talking about such a large upside. Now, what's baked into this? Is a Supreme Court reprieve on patrons getting food from outside baked into this call?
It does definitely include a favorable verdict for the multiplexes. Without that, you cannot make a case. But having said that, I think the kind of levers, if you just look at Inox vis-a-vis PVR, their spend per heads are much lower than PVR, their advertising revenues. But if you see the last 12 months, the rate of growth that Inox has shown vis-a-vis PVR has been quite astounding. So that's the gap they have to make up. Our own call is that in the next 2 years, Inox's EBITDA will probably grow at 2x the rate at which PVRs will. But Neeraj, this is not, I think one thing that people miss out in all this is one, substitutability for the product, which is very low in India still. I still don't think Amazon Prime, Hotstar, Netflix have reached that scale, where you'd probably want to sit home and watch a Bahubali on either of these platforms. So I think one is substitutability of the product, and I'm not in that camp that believes that there are alternatives for mass India at an aggregate level to this product. The other is this is as much a real estate game as it is a multiplex game. And most of the premium properties have sort of been taken away by Inox and PVR. So for a third player to come in and make a significant dent on the pricing is very tough.
True.
That is an important point, and that is why when you have a duopoly, there is a certain amount of pricing power that you have. And I think that can offset any short-term challenges that you might be going through. Now, if you see, they have already started dynamic pricing on F&B for PVR and Inox across their properties in the country. Now, interestingly, I was with the Inox management just a couple of days back, and I asked this question to them. They said that their spend per heads are actually the same today for the month of August as they were, say, a couple of months back. What that means is that conversions have moved higher. So if you had, say, 100 people going into a multiplex and only 20 consuming F&B, that 20 has probably gone up to, say, 30, 35. So they're maintaining their spend per heads. The other important part is that even though they've taken a price cut on their high gross margin products. So for example, if you see the highest price popcorn now, which used to be 240 rupees, at any point in time, Inox is selling it at 190 at the highest point. So that's a substantial reduction, but they are managing to make it up through the insignia pricing. So just to give you a case in point, the prices on the Independence Day releases were as high as 1500 rupees in some theaters. So there is a way to offset these things in the short term to make sure that they don't impact margins. But yes, I do believe that this will eventually go in favor of the multiplex owners. I mean, honestly, I believe it has been raked up more politically than anything else, to be very honest. As a consumer, are these prices exorbitant? Of course they are, if you ask me. But you know, there are two ways. If you're looking at it in terms of the way of the stock price, I think advertising is a 95% gross margin business. Food and beverages is a 75% gross margin business. Box office is 50-55%. So actually the bulk of the revenues which comes from box office is the least important in terms of gross margins, which is why you're finding that Inox today, at least on their insignia properties, even if you don't have a ticket, you can go and then consume F&B. So it's virtually a restaurant now.
QSR of sorts.
Absolutely. So I think the model itself is changing. The number of minutes advertised a few years back used to be about 16, 17. In blockbusters, it's gone up to as much as 21, 22. All these things are margin accretive. So I think, you know, keeping all of this in totality, I don't think the valuations are that expensive, especially in the case of Inox. It's probably coming to a very low double-digit price to earnings multiple, maybe 12, 13 times. I think for the kind of opportunity that there is, and don't forget, PVR just struck a very important deal in South India. So that's the point I was trying to make about how it is as much a real estate play as it is a multiplex play. Like South Bombay, for example, is pretty much Inox centric now. You know, you've got CR2, you've got Metro, you've got Atria, which is actually diverting a bit of traffic from, you know, Phoenix Mills PVR. So I think the way these two companies are going to approach it is, I think they're going to mark territory and sort of control that. And I think in a duopoly, it's much easier to do when you know who your competitor is and what their strategies are. So keeping that in mind, I think it's a good play to have. It's a great proxy on consumption, and I think lack of substitutability plays right into the hands.
Fair enough. Well, a final question from my end would be on durables. We've had, should I say, a weak summer for a lot of these durable companies, but you are positive on them. You look at names, Agam, that are not very big on air conditioners. So something like a Whirlpool that gets about 80% of its revenues from washing machines and refrigerators, more so on refrigerators. Again, there is no substitute for refrigerators as such. Right. So that's another, you know, we've liked that stock for a very long time. We continue to remain positive. IFB is another name where almost 45% of their revenues is coming in through washing machines. You know, they're just expanding capacities both on top load as well as front load. They're looking at appliances in a fairly big way. So I think the risk that probably something like a Voltas or a Blue Star might run, I don't think are there as much as in these other companies, which are not so much summer dependent, so to speak, because refrigerator is a product, even in winters, which is required all year round because there is no substitute to making ice to that effect. Penetration levels are low. That's sort of a more macro story. But if you're taking a valuation call, I'd say go in for IFB as opposed to Whirlpool. Whirlpool's coming to you on our estimates at about 36, 37 times FY20. IFB would be about 10x cheaper than that, closer to 24, 25 times. But in both cases, I think the growth will be in excess of 20%. And you're reasonably hedged away from air coolers, like you saw in the case of Symphony's results. You're hedged from ACs as well as coolers in both of these products. All right.
Interesting, Rahul. So good having you. Thank you so much for taking the time out and being with us. And look forward to have you more often on the forum.
Thanks so much.
Well, that's well, interesting insights into a few interesting companies, I might add, and some themes as well. Rahul Arora from Nirmal Bang. Let's get in a quick earnings call going before we start talking about the charts as well. Dilip Buildcon, well, jumped as much as 5% before cooling off though, but reported a robust set of numbers for the June quarter. Company's profits doubled this time around. Margins witnessed a slight contraction. But talk about the numbers in further detail with Rohan Suryavanshi, joins us right now on the show. Rohan, good having you. Thanks so much for joining in. Good quarter. You could argue that margins have stayed flat, but revenue is up, profit up. Is this a sign of things to come in the quarters ahead?
First of all, thank you for having me on your show, Neeraj and Agam. It's a pleasure as always. Yes, a fantastic quarter for us. Revenue jumped almost 47% from the same quarter last financial year. EBITDA also jumped similarly about to 46%. But the most important thing is the PAT jumped to almost 109%. So the PAT doubled from about 120 crores to 255 crores on a top line of 2,445 crores. So, obviously, as you rightly said, it's a sign of things to come in this financial year. So we are very excited about what has
Rohan,
been.
I'm asking if indeed this is a sign of things to come. Do you reckon that the performance that you've put in the first quarter is symbolic of what you could do in the quarters ahead, considering that we are hitting a busy earnings season, maybe spending on certain projects might be difficult to predict. So have what you done in quarter one, at least on the... Oops, I think we've lost Rohan Suryavanshi. Do we have him? No, I think we have lost.
But he was making a point this time. He was suggesting that the profitability, which has risen well about 107%, and while margins have remained largely flat, they are, well, should I say, happy with the quarter. That's as far as the management is concerned. And they are suggesting that based on the orders that they already have from the government and NHAI, where they're likely to see a more impetus build in, and it's likely to be a stronger year, given they have already seen a well over 46% rise in its revenues at this point in time.
Well, interesting. I wish we could have gotten that answer about whether or not the future can go up in the same fashion. By the way, while we wait for that, maybe we'll try and connect with him. But just before we get in our technical experts as well, I think a couple of stocks, and Agam, I buy into the point that Rahul was trying to make, that maybe some of the earnings normalized in FY20 could not do well. But, analysts don't lead to stock prices moving up, buyers do, right? And if we look at two companies which are clearly showing this trend the last 3 or 4 days, one of them is GAIL, the other one is United Breweries.
Yeah.
Decent numbers, half decent numbers, we would have to say. We spoke to Shekhar Ramamurthy. The stock's on a roll.
Yeah, it is on a roll, and quite rightly so, considering the kind of volumes that we've seen. That's the reason why you're seeing the stock trade at around 1,400. Analysts, of course, are split, but that's largely because of valuations.
Oh, interesting. So United Breweries charting a completely different case in point. I don't think Som Distilleries had such a good quarter. So some of the other companies, smaller ones, getting impacted by those excise hikes. But UB on a different wicket altogether. The strong moves there. Actually, Som 2 has risen a bit today, but got a slam dunk in the other session. Do we have Dilip Buildcon back with us? Okay, we do have. Rohan, so that's the point that I was trying to ask. I mean, considering the uncertainties that we have, particularly over the next 12 months with regards to the elections, and therefore unpredictability on spends, do you think that what you've done in quarter one, and I'm not talking about the bottom line really, I'm mainly talking about the 40-45% revenue growth that you've been able to show and the order inflow that you've gotten in, do you think you can emulate that in the quarters ahead?
Sure. Sorry, because the line was not so good, so I couldn't hear you properly now. But yeah, I could hear you this time. Yes, this is a sign of things to come. Now, am I talking about 45-47% growth on an annual basis for this year? At least that's not what the guidance we've given out. We've said we will grow to about 10,000 crores of top line, which is about 30% increase from last year's top line of 7,700 crores. So that is the guidance that we've done, and we're very confident to meet it. And this number clearly indicates that. Now, talking about the election part, for someone like us, we have an order book of about 3 years currently already in our hand. So this year, even if we were not to get any orders, we still are in a very comfortable position. And this is the same situation for every other EPC company in the sector, that they have a very strong, robust order book in hand. On top of that, in this financial year, the government has said that they will award about 20,000 kilometers of roads. Now, if you look at it, this will be higher than what was awarded in the last financial year. And when we look at how the ordering is going to come up, we can already see all those orders which are about to be bid out. So all that, the whole process, because eventually the market only gets to know when we won a project or not. But for for all the companies, we are tracking projects from an earlier stage. So all those projects are in line. They're just awaiting land clearances and other regulatory clearances. So they're waiting for that hurdle to cross when the awarding will come. So your awarding will happen in Q3 and Q4. And at the end of this financial year, we will again have an order book which will be larger than the order book that we have right now. So we'll have a larger order book than we have right now at the end of this financial year. And the total order inflow that we expect on a conservative basis to come to the company is about 10,000 crores at least. So all in all, I see this financial year, especially because it's a year before elections, the government will want to award more and more projects, and which it has already indicated and it's on track to do. We have already indicated how much we are going to do in terms of our revenues, so we are very confident there. We have already won some good orders, and we are in the process of bidding for more projects. So we should be on track.
Right. Rohan, you mentioned the election year, and in fact, from what I'm reading in reports, in fact, it's a little bit of an opposing view that these analysts are taking. They're suggesting that there could be concerns considering government capex could slow down in this election year, and they were likely to divert funds in other areas. How would you address this concern? And the second one is, from what I understand, there has been an increase in HAM projects, and these are the kind of projects which require higher working capital. Do you think that could be a little bit of a challenge as we move into the rest of the financial year?
So, to answer the number one part of your question, I don't know what analysts you're referring to and how much they cover the sector and what are they doing. But I'm someone who's at the bottom of the pyramid. We are when I say I'm in the company and the company, we are the ones who are seeing action on a day-to-day basis, which analysts and obviously other people cover only once they speak to us. And other agencies. So here, I'm telling you directly from our thing. And even if you look at all the commentary that the government has done, what our Honorable Road Minister has done and what they've said, all of that is very, very clearly they've indicated what they want to do. Now, in terms of, you talked about how the budgetary, the government might try and control some fiscal slippage and all of that. Now, the part that the government is funding through its allocated budget is still a small part. They've already taken approval for debt from SBI. About 25,000 crores is what SBI has approved the NHAI. Besides that, they are in the process of monetizing their assets through TOT. So that's another area where money is going to be coming through. Then they're also in the process of raising bonds. So it's not just that they're dependent on government budgetary support for this. They're also looking at extra budgetary allocations and raising money through other means. So to all in all, the idea and the agenda of the government is very clear. So we don't foresee there being any problem in that scenario, at least because I can see the bid pipeline and we have the whole range of contracts which are going to be coming up for ordering. So I'm very confident in that. Sorry, what was the second part of your question?
The second part was with respect to the HAM projects and the requirement of higher working capital.
So no, there is no higher working capital that the HAM project requires. It is in line with how the EPC project is. The only thing is when you take a HAM project, you have to go put your equity and you have to put you have to raise debt. So that's because, the banks and the banking system has been in such a problem. There has definitely been some issues about how that is going to come through. But just today, SBI has come out with its draft policy on how they will be funding HAM. So till now, SBI had not done any funding for HAM projects. Now they've agreed and they've come in to the HAM project. So there's suddenly another big player which has come in, which till now, the largest lender in the country, had been staying away from it. Just today they've come out with the draft policy on how they will start investing in HAM projects. Number one is that. Number two, yes, the government obviously has been awarding projects in an equal pace in the both HAM and the EPC space. So obviously it requires equity. And companies which are good and companies which have showcased a track record of doing projects on time and have been able to have better balance sheets, they will obviously be in a better situation.
Okay. Rohan, did you have a question? Sorry.
No.
Okay, Rohan, we'll leave it at that. Thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. All the best for the quarters ahead.
Thank you.
That's Dilip Buildcon with their thoughts. The stock's done reasonably okay for itself, but a bunch of other names. By the way, Saxoft, I don't know if it's a recent move in the last half an hour or otherwise, but it's had some very strong move, has Saxoft just shot up in the last few minutes of trade. Max India has really shot up. Unless I'm wrong, it has. Yep, it has. So Max India has shot up big time. There's strength in future retail amongst others, which seem to be doing okay for itself. But let's try and get some sense of what some of the individual companies are looking like and what are some trading ideas from our experts as well. Do we have our technical experts with us? I think we'll get them in just moments from now and talk to them. We'll also try and touch base with the management of Intrasoft at some point of time on the show. That stock has really been beaten down in the session today. Okay, I'm told we do have Mr. Arvind Kejriwal of Intrasoft Technologies, that management with us. Mr. Kejriwal, good having you. Thanks so much for joining in. 2 quarters in a row now. The numbers have been way below what the street was working with. What's led to this, and how is business looking like? Because a bunch of your investors would be a worried lot right now.
Thank you for having me. So I've kind of explained that in both my releases, what we're going through. So, I'll try to do that on this show, right? So we've been growing at a very rapid pace, at a CAGR of almost 70% in the last 4 years. And when you grow at that speed, you need to take a pause and you need to consolidate and you need to prepare for the next level of growth. And part of that strategy and part of that, the whole internal meetings that we had, we realized that we've made our, the sales very scalable. We made our delivery engine very scalable. But where we now need to work upon is to make our availability of capital scalable. So what I mean by that is that, in the retail business, the more stocks you have, the more your sales capability increases. But if you keep on paying for it, then soon we hit a roadblock with the availability of capital. And we had only 2 options, either to keep on taking debt on our balance sheet, something that we strongly are against, or we needed to, dilute our equity. So the third option available to us was to generate cash flow through better terms of trade, negotiating with our trade partners who are also our suppliers. So we are going through that transformation right now. I hope, my call today was a little more, give them the confidence that this is a change by design and not by any market forces. And it's something that we strongly believe is on the right path. And will see us, 2-3x or whatever else we plan as we move ahead. So I hope that answers your question.
Well, it does, but there are a couple of things that I would probably want to understand. One is that does this change by design, as it may be, lead to the kind of performance that you've shown in the quarter to continue for the next few quarters? Because it does have an impact on your reported numbers, more noticeably on your earnings. They've come off quite rapidly from what they were on a YOY basis. And 2, have your investors bought into this explanation? I mean, some of the large investors that you have, are they buying into this explanation? Because for them to see their currency and their investment more than halving in the last 6 months is not a pleasant feeling.
Your first question was earnings, right?
Yes,
so
whether this pain lasts.
Yeah. So, you used the word pain. Can you, I suggest that you use that in conjunction with the cash flow that we generated. So if you look at the numbers we invested, we were cash flow negative, some $3 million in the previous quarter. And a comparable quarter, we had invested $2.2 million of our money. But in this quarter, on very similar top line, we actually generated 0.7 million cash flow. So, if you look at it in conjunction, it makes a lot of sense. If you look at it in unison, then what you're saying is, you show the margin that you just spoke about, but keep on investing and borrowing more capital, right? And then eventually we would become a very debt-laden company, and that exposes everybody to a much larger risk. On your second answer, yes, I had a call today, and we've been, we will talk more, and I hope that I'm able to, show a plan and show a path to a very strong and a confident growth in the next 3 to 5 years. So in our journey, the space itself is evoluting, and we are also learning along the way. So, it's never easy. It never is, given the size of our addressable market. But we believe that our understanding is as good as it gets, and we are very committed and focused on and reaching that. And I hope to communicate that to all my larger shareholders.
Mr. Kajaria, you do suggest that you've taken conscious decision in order to change certain operating ways, and this is with respect to how you guys want to go about business, and that subdued earnings have been reflected over the previous couple of quarters. My question then is, how long do you expect these earning numbers to come through, say, in the future? Would it last for another 2 quarters, 3 quarters, 4 quarters, or do you have any projections in mind or timelines at this point in time?
So let me address that question as I did earlier today in my call. See, margins have to be looked in conjunction with cash flow, right? So margins are part of cash flow. So when I'm saying I'm going to generate cash flow, de facto I'm saying I'm going to generate margins as well. The quantum depends on the opportunity at the ground. It depends on our terms of trade, bettering with our partners. But all in all, what I'm saying is that we will generate cash flow one way or the other. And that capital, that cash flow, is what's going to be used to kind of grow the business 2, 3, 4x from here. And as we do that, right, that's when the shareholder value will be more visible. But we need to take this step in order to reach there. So you should look at us as a more longer-term perspective than maybe a quarter to quarter.
No, Sam, Mr. Kajaria, I'm sure your shareholders are taking that. I have no doubts on that. My question is this, that while we are looking at the cash flows and what you could do on that front, there is also another eye that people would have on what the reported top line, bottom line numbers look like. Now, do you have any idea, or can you leave us with some sense of how this year could look like on that count too? Cash flows will look robust. I buy your point. What about the other argument? How would the reported top line, bottom line numbers look like for FY19?
As we go down the path of improvement in cash flow, we're going to use that money to go top line. So both go hand in hand, right? It's not that we're going to generate cash flow and then sit tight and not watch the top line grow. Consequently, if top line grows, it will also lead to a growth in bottom line. So what I'm saying is, you and I are saying the same exact thing. I'm just saying that we're going to lead from the cash flow front rather than, inadvertently use and grow the top line and then borrow capital. So it's the issue of, where we're going to use the money from rather than what you're saying. So if we are successful, which we believe we are going to be, and generating enough cash flow, then you will anyway see the top line and the bottom line, which is part of the cash flow. Now, the question is whether this will take 1, 2, or 3 quarters. Well, we started this change from April. I requested today on the call to give us a couple of quarters so I can give you a more definitive thing. But one thing we are very sure is that we're going to achieve our cash flow projections for the year.
Okay, I still was hoping for you to give me an answer on the top line and the bottom line numbers as well. I buy your argument on the cash flows. I hope your investors also do look into the arguments that you're making. Mr. Kajaria, all the best for the quarters ahead. Thanks for taking the time out.
Thank you very much, sir.
That's Arvind Kajaria of Intrasoft. I don't know. Doesn't look like a happy hunting ground. The last couple of quarters have been very, very disappointing. This one even more so. Maybe the cash flows are getting generated, but the street doesn't seem to be buying that. This kind of selling doesn't happen because a rookie 2, 3 investors have sold out. There are some people who have sold out after these numbers, and just look at what the stock has done over the last 4 odd months and you will get the picture. It's at 250 currently. It's come off quite rapidly over the 3-month period. That's about a 50% downtick that we've seen on Intrasoft Technologies. So not the best of times. Anyways, hopefully they arrest that slide soon with some credible performance. Let's talk about the markets though, and talk about charts and the index and specific stock ideas, and then get in Sharmila Joshi as well. But start off with Hadrien Mendonca of IIFL. He joins us right now on the show, and Abhijit Phatak of Definedge Solutions with his thoughts as well. Gentlemen, good afternoon. Thanks so much for joining in. Sorry to keep you waiting. Had an earnings conversation. Hadrien, let's start off with you. How are you approaching trade today? We are looking like we are trading almost at the lowest point of the day. Would you initiate some fresh short positions at this hour?
Yeah, we're definitely near the low point of the day, but I think we are approaching at a very important support zone of, and that is 11,350 zone. So I think as long as we are above 11,350 and which we are very close, towards that level, going aggressively short at these levels, would not be a good idea. See, the overall, picture has not changed at all. We have entered into consolidation, and within which we also are seeing a little bit of price correction, and that is absolutely normal for a very solid trending market. So I think this should not harm the overall, structure at all. I think any decline still should be a good opportunity to go long. So as far as the Bank Nifty is concerned, it's looking slightly weaker now. If you see the constituents of the Bank Nifty, and also if you take into consideration the Nifty constituents, if you see the SDFC twins, if you see Kotak Bank, if you see IndusInd Bank, L&T, Tata Steel, Vedanta, you name it, and all these constituents are actually looking quite weak at the current moment. So I think definitely we are heading towards 11,350, and I think around those levels it should be a good opportunity to go long on the Nifty.
Okay, Abhijit, good morning, good afternoon to you as well. What would your approach be to the benchmark indices?
Yeah, I have the same view. Nifty is range bound right now, and after crossing the all-time high of 11,178 a couple of weeks back, the fact that it is consolidating itself is a bullish sign, and otherwise it should have broken it by now if it was too weak. So any down, any dip should be used to buy, and for the timing, since it is sideways near 11,400, one can go short in a 11,400 straddle. The total is about 210 right now, maybe for a gain of 30-40 points in it.
And Abhijit, interesting stock ideas that you're tracking at this point?
Yeah, one stock which has shown a very bullish consolidating right now is ITC. It has crossed 305 convincingly, and with a stop loss of 302, it can be bought, and maybe for a target of 312 or maybe even 320 going forward.
Sorry, ITC. Which is the other idea, Abhijit?
Other idea is Axis Bank has reached its very long-term resistance near 635, 640. So on any rise, I would recommend to go short in it only with a stop loss above 640. So not at this level, but on rise. And it can come down to 620, maybe even 600 in the next few days.
Okay, let's stay on, gentlemen. So much more to talk about. Before we talk about what is arguably the bigger worry over the last couple of days, let's just get in a quick word from Sharmila Joshi as well, an initial thought. She's been waiting very patiently as well. Sharmila, good having you. Thanks so much for taking the time out. Thanks so much for waiting patiently. Cannot talk about the two top movers on the index, both of them on specific news. One is Gas Authority of India, 3 days on a trot, post numbers doing well. The other one is Kotak Bank, falling today on this piece of new development that has happened.
Well, yes, I think for GAIL, as you said, definitely positive news, and I think that run can continue. And I think similarly for Kotak Bank, while I would really look at it as a near-term negative, because there is nothing really in the numbers that can disappoint as far as Kotak Bank is concerned. So maybe I think you can use this dip really to buy into the bank, because according to me, while yes, it might mean that you will have to bring your shareholding, the promoters will have to bring their shareholding down, etc. But I don't really look at that as a negative from a fundamental perspective. So I think that if you really continue to see the stock correct, or because of that little uncertainty overhang, if price stays range bound, I think it might give people an opportunity to buy into the stock.
Okay, hold that thought, guys, because we need to address the widening trade gap, which has only added to the rupee's woes, even as the Indian currency hits a new low. And we have Ira joining us right now to give us a perspective about how worrying this could be, Ira. So, yes.
So we'll start with the rupee, right? I mean, because rupee today has gone below 70 and it has stayed there. So, some people are talking about the fact that 70 to 72 perhaps is the new range to be looking at. Yes, as you said, the trade deficit added to a whole bunch of problems. Outflows, trade gap which is already wide, the Turkish problem, all of that adding to the currency problems. I just want to bring out a couple of charts to make a few points. One, I think the chart that was on your screen tells you that this is still a global story within which a local story is playing out. The chart on your screen was the rupee on an inverted scale and the JP Morgan Emerging Market Index. So it tells you that it's not like the direction or has been very different for the rupee as for the other emerging market currencies, but the pace at which the currency in India is weakening has definitely been higher. So whether you look at today's numbers, where the rupee is the worst performer in the Asian basket, you look at a 5-day chart of the world currency comparisons, India is the worst performer in the Asian bucket. The year-to-date comparison, again, India is the worst in the Asian bucket. The point simply being that India is moving in the same direction as everybody else, but the pace at which it's moving is a little bit steeper, at least in the Asian basket. The reasons for that are, one, the trade deficit, the oil problem, not just the oil problem, some of the issues with the core deficit, which link into the overvalued currency. And most recently, and I'm going to throw this out on the table, we've seen a surprising set of comments coming out from the government talking quite openly about the fact that the Indian currency is overvalued. Now, we can say that as commentators in a studio, but government officials coming out and openly saying time and time again that the Indian currency is overvalued is leading people to talk about whether this is a shift towards a weak rupee policy. I don't know that there are any stated policies like that, but it's a very slippery slope. You can't have policy makers making the point that your currency is overvalued, because then that sits in the market psyche. So every time there is, a hit to EM currencies, the rupee will then underperform, because everybody thinks that, well, the government itself thinks its currency is overvalued, so let's sell. Yes.
Interesting. Yeah, just one follow-up to that. These numbers that have come out, the trade deficit numbers as well, obviously, at some point of time in every number, crude has to play a part, but there are a lot of other factors that have come into play there. And my worry is, and tell me what your thoughts out here are, that if crude, which is at sub 70 right now, and still we have such numbers, with the rupee at 71, 72, if crude were to rear its ugly head again, then what happens to those numbers then? No,
absolutely. I think, oil is a problem. We all know that. But I think, economists have been pointing out that the core trade deficit, if you take non-oil, non-gold, that has been worsening for the last few years. Sajid Chinoy has been making the point, which is why he's been talking about the Dutch disease and the overvaluation of the Indian currency. So the non-oil, non-gold trade balance is a problem. On top of that, oil has been, a pressure point, and if oil goes higher, then, we've got a much larger problem on our hands. Currently, the current account deficit projections are in the range of 2.5 to 2.9 almost. I saw a Nomura note which talked about 2.8 or 2.9. 3% is sort of the red line of current account deficit. We haven't gone anywhere close to that. But I think it's important to point out that even at, say, a 2.5 or a 2.7, we're going to have a problem funding that deficit this year. So BOP may actually, balance of payments may actually be negative, because as you all have been talking about, portfolio flows have been very weak on a year-to-date basis. Equities is, negative 1,000 odd crore, but debt is a negative 35,000 odd crore. So total negative is 37,000 crore for the year. So with those kind of numbers, even with the current trade balance, we have a BOP problem. If the trade balance were to worsen further, then we have an even bigger BOP problem.
Well, tough times and busy times maybe for the rest of the year as well, Ida, but thanks for putting this into perspective. That's Ida Duggal, well, giving you a quick snapshot of how worrying the macro might look, if indeed that's the real term. But there is a bit of worry for sure, and maybe it's showing in the way the markets are performing as well. Commodities may have taken a bit of a tumble today, but Sharmila, what happens here? Crude notwithstanding and what it does to the macro is one thing, but the fact that commodities saw a bit of a tumble on the global markets led to a fairly steep reaction in the Indian bourses as well. Everything from a Vedanta to a Hindalco or Tata Steel are all correcting. What are the thoughts here? Do they present value, or is it just too uncertain to buy despite the correction that we've already seen year to date?
Well, whether to buy or not, I think will ultimately depend on how much more they correct, or what really happens in that space from here on. But one thing is for sure, when we first had this talk about trade wars and and so forth, this was many months back, and I really thought that sanity would sort of revert to the market in maybe 2-3 months down the line. But we seem to be as far away from any kind of a solution as we were then. It's more or less just more grandstanding and gesturing and back and forth kind of news that happens on that front. So I guess what I'm trying to say is that uncertainty will linger, because there doesn't seem to be any getting away from the fact that this is far more a serious problem than I really envisaged to start with, and things seem to be getting sort of even more serious. So I think that a good strategy, at least far as the metals goes, is to really play it by the year. For instance, I think Hindalco, with the kind of numbers we had both from Analyst and Novelis, that definitely seems to be on a good stand. But yes, I think as far as some of the other metals, copper, steel, etc. goes, it might be good to play it by the year. I think the same goes for crude because there has been a lot of back and forth of news development where that is concerned. And prices have stayed actually quite sticky for a lot longer than one thought, and that fear will therefore remain that they could sort of bounce back from the current levels they've corrected to. So I would really play it by the year as far as a lot of the commodities were concerned. And I think this is perhaps one of the reasons why market doesn't really give very high valuations to commodity stocks, because you do see things getting disrupted very quickly and in a very unexpected way for a lot of commodities.
Sharmila, as a positional trade, would you recommend going long on some of the IT names or pharma names, or for that matter, any of the other consumption names which have a substantial exposure to export markets at this point in time?
Yes, I think yes to all three sectors, whether it is IT, whether it is pharma, whether it is consumption. Consumption, yes, I don't know so much from an export perspective, but more from a domestic perspective, there things certainly seem good. Pharma, I think, as numbers from Sun Pharma very recently seem to suggest that US pricing was an issue that had been flagged off, and companies were doing things to sort of circumvent it or find other places where they could make money, and specialty chemical has been one place that Sun Pharma has been quite serious about. Now it seems to be paying off in terms of some kind of a difference to the bottom line. So yes, I think pharma definitely, and IT also perhaps a little more selectively. But I think in IT we now have a strange situation where actually some of the front lines are available at a better valuation than the mid cap. So while mid cap ITs had the best run, and we've really seen good results, good valuations, and good buying coming into those stocks. From here on, maybe you might have to be a little bit more selective there, and yes, maybe the large cap IT could sort of come back into a little more focus.
Okay, just looking at some of those winners and losers as well in today's session. Hadrien, Mendonca, if I can come to you, I don't know if you gave us a call on the large cap financial names, but if you haven't, a word on Kotak Bank and HDFC, both of which are looking wobbly in the session today.
Yeah, Kotak Bank, in fact, after the gap down that we saw today has actually, aided the stock to break down from the trading range that we saw in the past 1.5 to 2 weeks. So in the short run, it's not a good sign, and I think Kotak Bank, is looking weak at the current juncture and can fall towards its 200-day moving average, and that is close to the 1200 mark. So I think Kotak Bank weakness will persist going forward, and one can remain short if they are short. If they are long, he has to really reevaluate whether he is ready to stay with Kotak Bank. It depends on the horizon, actually. If you're a long-term player, Kotak Bank with a long-term view should not, have any problems over there. But in a short run, you should definitely remain short on the Kotak Bank.
We still haven't asked you about your calls for the day. What bets would you take when it comes to stocks?
Yeah, so my conviction on the pharma sector as a whole, continues to get stronger and stronger, and Sun Pharma is the first stock that we're pretty bullish on. Not only from a trading perspective, but even if you have a 6 to 8 month horizon, Sun Pharma should be a very good bet. As far as the trading call is concerned, one can consider buying Sun Pharma at current levels. So we are expecting a short-term target of 631 and place a stop loss at 605.5. Now the main rationale here is on the weekly chart we are seeing an inverse head and shoulder pattern breakout, and one should not miss when we see such kind of rare breakouts happening. Second stock that we're pretty bullish on is a realty high beta stock, that is DLF. We are seeing consolidation breakout. It is also moving beyond its 200-day moving average, which is a very positive sign. This is happening after quite a long time. So DLF should also be considered at these levels for a target of 212 and place a stop loss at 203.
All right. Well, Bajaj Finance is the other one from the financial sector, which has hit 2,900 on an intraday basis today. So it remains strong. It has come off substantially from day's highs. But the question a lot of traders and analysts are asking is 3,000 on the cards in the near term? So Abhijit, I'm going to take this question to you. Do you think that's a possibility for Bajaj Finance? 3,000 in the near term, or for that matter, say in the next 2 or 3 months?
Yes, very much. Bajaj Finance is a very bullish stock, and any dip should be used to buy. The stop loss is a bit wide below 2600, but any dip towards 2800 or maybe 2750 should be used to buy it, and it can go towards 3000 in the coming weeks.
Okay, Sharmila, before we thank you, would you buy into Bajaj Finance?
Well, yes, why not? I think you just need to have a significantly long-term kind of a horizon in mind, because, you know, a lot of the positives are now in the valuations, in the price, the valuation the market is giving the stock. But there's no denying that, you know, this is a stock that is on a good growth track. So in that sense, I don't have a concern. It's just the valuation and the price that it's available at. I mean, even if you say yes, that it should get a premium valuation, it does seem a little stretch, but in one word, the answer would be yes.
All right, fair enough, Sharmila. We leave it at that. Thank you so much for joining us and taking us through your views on the markets. Well, it's time to take a short break, but on the other side of Countdown, we will get you the Fab 4 stocks of the day, as well as what the dealing rooms are recommending to their clients. Lots more lined up. Stay tuned in a Bloomberg Quint.
City Union Bank. Trust and excellence since 1904. City Union Bank wishing you a happy Independence Day.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're still with us on Countdown right here on Bloomberg Quint. 28 minutes left for the markets to shut shop. Just bring up what Europe is doing. When we started off, the markets were about 0.5% higher. Cooled off a little bit. DAX certainly has. CAC about 1/3% still. FTSE about 0.5%. But a bit of a cool off for the DAX for sure. The Dow futures should come up on your screen. It had a bit of a slam dunk yesterday, especially the NASDAQ, because of what happened to Tencent and a few other companies. For now, seem to be starting off on a good note. Mid caps and the small caps have plateaued too from in our markets today. But as usual, there will be stocks which are doing well. So let's get in Yash Upadhyay to talk about what's made to his list on the Fab 4 stocks of the day. Good afternoon, Yash.
Good afternoon, Neeraj. So first up, we have, obviously we have Aster DM. That one's reported an extremely good set of numbers and the stock is reacting positively to it. So a 17% growth in its top line, a net profit in the first quarter as against a net loss in the year ago period. Margins have more than doubled from 2.6% to 7%, a fitting reply a fitting farewell to the earnings season. NBCC had rocketed as much as 4% today after receiving a big 250 crore order from SAIL for the construction of a medical institute and a specialty hospital in Rourkela. We're also looking at all cargo logistics. This one had surged as much as 3.5% to 4% today on the back of an Economic Times report suggesting that the company is in talks to acquire the entire promoter holding in Gati Limited, a similar move seen on Gati as well. And lastly, we had about 22 stocks hitting fresh 52-week high today, but the one that caught my eye is Pfizer. That one's up about 5% today, with volumes too coming in significantly higher. Back to you.
Well, Yash, thanks for joining us and getting us those stocks which are buzzing in a market which is otherwise very subdued. But let's get in on the fundamental voice here. We have Mayuresh Joshi, fund manager at Angel Broking, joining us at this point in time. Mayuresh, good afternoon and thank you so much for joining us. What do you make of these cues right now? Let's talk about the rupee, essentially. Your expectations here and how you see its impact play out on some of the sectors that's under your coverage.
So afternoon, Argam. I think the large element in terms of the rupee fall has more to do with how the dollar is reacting at this point of time in the aftermath of what has happened with the lira and the consequent effect on the euro. So I think a large element of the rupee depreciation is boiling down to this fact. But I've been hearing figures which are atrocious at this point of time. So I don't think that you're probably looking at levels of around 80. Yes, I think the trade deficit which came in also is impacting the rupee move, at least at this point of time. But a large element in terms of this rupee depreciation has to be seen in terms of a dual effect. So I think for exporters or anybody who's probably earning revenues on that front, sectors like IT, Pharma are obviously feeling the tailwinds because of the sharp depreciation that we've seen. Though I think a lot of IT companies specifically have a hedging policy, and those pharma companies, I think how much benefit can actually trickle down even if the rupee stays at this level is to be seen. But nevertheless, I think it's a tailwind in terms of the translationary effect onto their P&L accounts. For a lot of other companies who probably use the foreign exchange for inputs, I think that again is something that one needs to really look out very, very closely. Though Brent has corrected significantly from the highs, you're probably seeing the benefits getting offsetted with the rupee depreciation. So I think marginal benefits can still come through. So I think crude oil derivatives or any companies which are importing crude as a raw material, I think to that bit, I think the small benefit does pass through if rupee stays around the current level against the dollar. For OMCs in general, I think this is obviously a detrimental effect because one really needs to look at two aspects. One, the crude pricing and the rupee movement. And again, I think the rupee moving significantly lower has an impact in terms of their sensitivity to earnings. So I think a lot of sectors get affected, Argam, but I think IT Pharma might probably feel the tailwinds, which is getting reflected in a lot of stock prices.
Well, Mayuresh, the earnings is out of the way now, and we have seen more surprises and pleasant ones as compared to ones which were not so great. But that said, well, traders and investors at this point in time are not so confident about the earnings as we move into the rest of the financial year. What is your view? How have you read these earnings, and what can we expect as we move into the next few quarters?
No, so Argam, I think the earnings selectively have been better than what one had estimated, but one must realize that you're probably looking at a low base. So again, if you take the last 2 years' performance, I think the earnings probably have been quite reasonable in my opinion. I mean, it's not been great, but to that extent, again, the kind of forecast that one really pegs for earnings to grow between 12 and 14%, I think you're probably looking at some amount of green shoots on that front. A large element of how the earnings recovery will probably happen is the bottoming out of the NPAs, as we are more likely to see that happen over the next 2 quarters. The second leg to this entire argument is also the private capex cycle. So the government front loading and the push through of what we've probably seen in terms of capex plans. I think the private sector is not probably replicating this at this point of time. More to do with the rising interest curve that we are witnessing and what probably happens in terms of the political outcomes. I think a lot of capacities are still underutilized. So unless you start hitting a certain threshold, I think fresh investments probably will still take some time. The third element in terms of a lot of these sectors probably still feeling the brunt in terms of underlying demand. And though you've probably seen very positive results come through from FMCG and consumer staples, I think consistency in these numbers, which can be achieved because of the MSP hikes that we've seen, a good monsoon which is panning out, can probably lead to better discretionary demand. Again, banking credit is something that needs to improve significantly going forward. And if one assumes that that aspect, along with the PSU universe actually helping the lending process improves, you might see, I think, the working capital constraints go down for corporates. So I think the second half, I think you can reasonably peg a 12-13% growth. For the overall year, it will still be in higher single digits. But if the momentum probably stays on our side, along with domestic flows, I think a 13-15% earnings growth over the next 2 years is not ruled out, and that will be the base for the market valuations and the market's premium justifications.
All right, Mayuresh, just hold that thought. I'm just going to address some of these stocks which are buzzing in trade, and I want to get some technical views here. The first one is HDIL. That's one's picked up over the last couple of sessions. It's up another 3 points right now. In fact, up as much as 13%, as you can see here. And again, on the back of volumes. In fact, we've seen a rise in volumes, substantial rise in volumes over the last 2 days. At around 29.5. Hadrien, can I come to you on HDIL? How are you reading the cues? Because if I'm not mistaken, it is flirting with its very important daily moving averages as well at this point. Would you initiate fresh longs on HDIL right now?
Yeah, definitely. Playing the momentum is very important, and likewise, what DLF is doing, even HDIL is trying to play a catch-up game over here. So I think HDIL definitely should one should consider going long on this stock. Although it is it is very, very tricky and dicey to trade with an HDIL, but the momentum and the volume participation that we are seeing is definitely saying that HDIL wants to go higher from here on. I think from here on moving forward, we could see levels of 35, 36 for an HDIL in the coming week or so. And that is going to be very important hurdle to pass through, because that is the long-term 200 moving average. So that is where I see the first hurdle for HDIL can come in.
All right, and the other confusing one, should I say, was Jet Airways, because of so much volatility that we've seen. But it is advancing in trade right now. And on a day when, well, the benchmarks are actually declining, so it's certainly outperforming the broader markets too. Today, it's up as much as 5% at around 297. Abhijit, how would you approach Jet Airways right now?
Jet Airways might have formed a short-term bottom near 250, which was a panic low recently. But on the chart, it needs to cross and close above 320 to show some more strength. Right now, it is strong, but it is approaching a resistance near 310, 320. And above 320, it can go back towards 350.
Okay, let's talk about some of these stocks which have exposure to commodities, the case in point, metals. We have seen a lot of traction in something like a Vedanta, or for that matter, Hindalco, and of course on the ferrous side, Tata Steel as well. All stocks are trending lower right now. Mayuresh, can I take your standpoint at this point in time? How would you, approach the entire metal pack right now? And perhaps how would you pitch the ferrous side of things as against non-ferrous?
So, Argam, I think a large element in terms of what we probably seen in terms of commodity prices actually getting pulled down, both in terms of what might actually happen with the trade tariffs and what is probably happening in terms of the Turkish lira. I think the results are probably there on your screen with commodity prices actually crashing. The second element in terms of the argument between ferrous and non-ferrous, again, the ferrous space specifically, I think the domestic steel industry looks very, very strongly poised. What you probably seen in terms of underlying demand is expected to remain very, very robust. And in terms of pricing as well, whether you talk about the HRC or the CRC pricing, that should bounce back very, very sharply in the second half and probably sustain. The third element in terms of the input costs, and though you might have seen some amount of firming up happening at this point of time, I think there'll be far more stability in terms of this input costs as the overall commodity universe remains a little bit subdued. What happens in terms of pricing, again, I think with the rupee depreciations against the dollar, I think the kind of fall probably gets offsetted in terms of the realization benefits that these companies can derive, specifically in terms of the LME pricing. And the fifth element obviously is companies like Tata Steel, for example, which also have got overseas operations, and what probably happens in terms of the tariff tantrums. So large element in terms of what they probably worked out for their pension liabilities, and again the expectations of their EBITDA per ton on their European operations should largely hold out. The debt probably remains a huge concern in terms of the leverage and the kind of servicing they need to do. But within the steel players itself, I think a dark horse can be Steel Authority, in my opinion, if one has a longish view of 2.5 to 3 years, where revival is probably there on the cards, with strong latent demand probably pushing up and abetting their realization and volume growth. JSW, Tata Steel become holds. While on the non-ferrous side, again, Hindalco with a strong performance shown both domestically and overseas, and expectations of margins probably getting far more sustainable, probably looks like a plausible story. So I think sale a dark horse, other are clear hold from my side.
All right, well, I'm just going to address two more stocks which are doing very well in trade today. One of them, of course, is, I think I've already spoken about HTL. The other one is Balkrishna Industries. That's also continuing to show an up move today, and for the third straight day, we are looking at a lot of strength. It's up as much as 5% right now, around 1400. Hadrien, what would your view be on Balkrishna Industries? Would you go ahead and well, buy more shares of Balkrishna Industries right now? If you would, what levels would you keep an eye on?
Yeah, absolutely. Balkrishna Industries this week, has shown immense strength, and in fact, during the strength that we are seeing, the stock is broken from this, larger range on the weekly charts. And what this breakout is actually indicating that we could see another 250 to 300 points upside from here on. So which means as long as Balkrishna Industries holds above 1320, 1330, I would like to be aggressive long on a Balkrishna Industries with a target of close to 1450 to 1500, given a 6 to 8 month perspective. So definitely, if to answer your question, I would definitely go long on a Balkrishna Industries post the breakout.
Okay. Gentlemen, stay on 3:15, that time of the show. We're going to get you a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been actively spoken about today is Divi's Labs. Clearly, it's up almost 1%, but some of the dealers did indicate that some of the large funds have been accumulating this counter over the past few days. So Divi's almost trading near record highs. So Divi's is for the first stock. The second stock that's been spoken about, and that is Bajaj Auto. And a couple of dealing rooms did tell me that, the counter has fallen significantly post its results and the comments in terms of market share. But they believe now that majority of the selling of some of the large funds which were to sell has actually happened. They believe that the incremental selling, if at all will be there, will be very, very limited. So they don't see enough selling that will come into Bajaj Auto. And the last stock is Century Textiles. It's flat in today's trade, but there's some buzz of a potential corporate announcement that could be in the counter. It's been it's reacting rather aggressively today. It was up significantly. It was up over 1% in morning trade, then it fell significantly. So it's a rather volatile counter, but that's been spoken about. But Yatin, what are you hearing?
Darshan, Reliance Infra, that is one stock, of course, trading almost at the low point of the day because of market conditions, but dealers do recommend a buy today, sell tomorrow kind of a strategy. There is talks of some kind of corporate action on the back of which Reliance Infrastructure is, active in trade. Apart from that, Britannia Industries also, that is one stock wherein we are looking at some uptrend. Domestic funds are said to be buyers in trade. So, Britannia is one more stock in the FMCG basket wherein dealers are bullish on. And finally, Eicher Motors at higher levels. Today we saw some swings coming in. The stock is almost 700 rupees off the day's high. And dealers do indicate that at higher levels, there is some profit taking after the kind of run-up that we saw, post the first quarter earnings.
All right, Yatin, thanks so much for joining us and getting us the dealing room check. In terms of other stocks which have been advancing in trade, and as Neeraj and I were just talking about, one of them was also United Breweries, which is up and about, and that's also moving up and higher in trade. I want to take a technical check with this one with Abhijit. Abhijit, what's your view on United Breweries? How would you address this stock right now?
Sorry, I didn't get the name of the stock.
United Breweries.
Yeah, it is a bullish stock, and I mean one should hold on to the longs if someone is carrying. Only thing is the stop loss is a bit far off below 1300, so but it can go higher.
Okay. United Breweries 4.5% higher. What did you make of the liquor company numbers thus far, Mayuresh? Chalk and cheese, the performance by almost all, either beer manufacturers or hard liquor manufacturers, but anything that stood out for you?
No, so I think very reasonable set of numbers, Neeraj, and even if you look at how the commentary is being poised for all these companies, I think a lot of these companies actually are feeling how the state elections will pan out. Nevertheless, I think the numbers which have come through have been quite reasonable, as I said. In terms of gross margins itself, the ENA pricings are looking far more stable. And in fact, the key states that one really talks about, I think for a company like United Breweries, for example, I think Uttar Pradesh and the kind of premiumization that they probably created within this state, I think that is reaping benefits for them. The other states like Maharashtra and Karnataka, I think the benefits of premiumization are clearly being displayed in terms of market share gains. And what can probably happen in terms of their cost optimization, along with the expectations of certain rate hikes being expected to be taken over the next few quarters, I think the price hikes along with premiumization should probably have a very telling effect in terms of margins, along with the stability in raw materials, as I said, for the ENA pricing. So I think the earnings probably look on a very strong footing for these liquor companies. So I think stocks like Radico, again, which is far more diversified than United Breweries, which is more into beer at this point of time. And again, the kind of aspects that one looks at for Radico, for example, again within the UP markets, and the kind of market share gains that it can actually accrue and gain can be significant from an earnings perspective. So yes, I think reasonable set of numbers, but Radico and UBL probably stood out in my opinion.
Mayuresh, Kotak Mahindra Bank is seeing a little bit of a correction in today's day of trade, but would you remain fairly constructive when it comes to its fundamentals? Thereby, would you also buy into Kotak Mahindra Bank right now?
So the fundamentals, Argam, have remained extremely solid. So even if you look at the advances number and the expectations of a 20 to 24% growth, if you look at the deposit side of their things, 22% growth, margins or NIMs expected to remain extremely stable between 4.2, 4.3. Credit costs expected to probably dwindle downwards, with GNPA is expected to come down to 2%. Though I think the kind of stress that you probably saw in the MSME book can continue for a quarter or two. But large element in terms of recovery can actually play positively, and a gradual recovery in ROAs and ROEs, which stood at 1.7 and 12.5% respectively. I think the only argument here is valuations at this point of time, because even the subsidiary performance has been quite reasonable. So if you take Prime, if you take Life, if you take Kotak Securities, have put on a good show and expected to put on a good show. So the price to book almost 6.5 times FY20, I think I would wait for significant declines. If that doesn't come, I think RBL Bank still stands out to be my preferred choice.
Okay. Last 10 minutes of trade left. Let's get a sense of what the closing strategies from our experts are. Abhijit, one trade that you would take home, that you would initiate right now and take home.
Long ITC is looking a promising trade for tomorrow.
Long ITC at the current point of time is looking a promising trade for tomorrow. What about you, Hadrien?
Yeah, I'll go with a short. We've already given 2 longs. I'll go with a short on Z Entertainment. If you do a quick chart check on the monthly basis, I think there is a big dent in the ongoing trend that we are seeing in Z Entertainment. So I think one should take advantage of the break of the rising trend, and one should consider going short. I am expecting a target of 480 in the coming week or so.
If you had a long call, Hadrien, on a Dish TV, the stock is moved up a bit in the last few minutes or the last few minutes of trade. If you had a long call there, would you stay long?
No, I would actually, just stay away, and I'm sure that I wouldn't have a long call on this TV.
Okay. What would you advise, Hadrien, to somebody who had a long call on HDIL? I think Agam spoke about this stock earlier, but nevertheless, it's moved up even further now.
Yeah, that's what we are expecting, a target of 35 to 36 in the coming week or so. So, definitely long position should be held, ride the momentum, till it's there, DLF and HDIL both.
Mayuresh, I'd want to end this conversation with the consumption theme right now, and I do want your view on something like a Britannia, or for that matter, Godrej Consumers, a Marico. What's your view here? What's the sense here? These stocks, well, at least by some where valuation metrics do look expensive. What is your view, and what would you advise your clients to do?
Absolutely no two ways about it. Yes, they are expensive, but again, the premium valuations probably are getting justified because of the numbers that they're probably posting, and the strong management commentary itself is a testimony that if the good show does continue, I think you're probably looking at these PEG multiples actually sustaining at higher levels. For all these three cases, again, I think the growth has been quite reasonable, and the commentary thereof in terms of volume-led realization growth seems to be far more optimistic going forward. Individually, I think the cost optimization programs that all these three companies have run, with Britannia expected to save 240 odd crores, Godrej Consumer through its Project Pi has actually saved 650 odd crores and expected to continue its optimization spree. And similarly is the case in terms of Marico. So I think the kind of distribution network that all these players are building in, cutting down on their wholesale dependence, getting directly into the retail outlets, you're probably looking at added advertising expenses, but that again is based on the premise of newer products coming through, and smaller and better priced SKUs to probably cater to the rural markets. Again, the modes that they've created around their businesses, the premiumization angle for Britannia in terms of premium biscuits, what you're talking about in terms of hair colors, insecticides for Godrej Consumers, or the other products for Marico and Dabur, for example. So I think the growth story should largely sustain based on volume and realizations improving for these companies, substantially translating into reasonable earnings growth. So yes, the valuations might be on the higher side, but stocks like Britannia, Marico, I think they're good quality stocks to probably hold on to.
All right, Mayuresh, we leave it at that. Thank you so much for joining us and taking us through your views on the markets at this point in time. But, well, let's take a stock check on Soba as well. Now, this is one of those counters which are losing out today. And it's been a fairly stable stock when it comes to the realty space, of course, on a relative basis. But today, Soba is declining by as much as nearly 6% at this point in time. Abhijit, can I take up Soba with you right now at around 465? What would your approach be when it comes to Soba Limited?
For some reason, the chart is not looking very good to me, and it is looking weak. Even on a weekly chart, it is not showing any strength. So I would stay away from it for the time being.
All right, and the other one I want to address is Imami. Can we pull up Imami as well? Because that's the other one from the FMCG pack, which is declining in trade right now. That's also looking quite weak. And, well, it's trading at substantially lower levels as well. Hadrien, your view on Imami, it's currently at around 550. What would you do with this one?
Yeah, so Imami, actually has witnessed a double top kind of a formation. And if you see, there are two tops exactly at 596, 597 levels. Failing to cross above which we've seen a complete reversal of the trend that we saw in the past 2 weeks. So I think we are seeing a very important hurdle that was unable to be breached on the upside. And I think until and unless we see that breach, I think we should, if you don't want to go long, one should just remain short at the current moment. One should be aggressive longs only above the 600 psychological mark is broken. That's where the conviction and the confirmation both will come. So I would go long only above 600 and not before that.
Okay, hold that thought, guys. Well, just about 2.5 minutes left for closing. So I'm going to toss it over to Neeraj to take us through the benchmark indices along with the broader markets ones.
Yeah, and then Agam will, of course, bring up all that's happening in the more liquid space as well. But just to start off with the large caps and the Sensex first. Sensex Nifty 0.5% odd down, and the Nifty Bank about 167 odd points down. HDFC and Kotak Bank were the principal culprits here. The mid caps and the small caps were faring a lot better for most part of the trading day. Just the last an hour, 15 minutes, I think the small cap index has come off quite rapidly, 0.5% lower. Interesting to see what the market breadth is. We'll talk about that in just moments from now. But let's take a look at the individual components. The gainers include a GAIL, third day on a trot. That stock is doing really well for itself, 3.5%. Then come the exporters. So Reddy, Sun Pharma, Infosys, Lupin, IT and Pharma doing reasonably okay for themselves. Bharti has some gains, but that's about it. That's about the gainers. The losers, and with reason. So Kotak Bank 3.5% down. We obviously anticipated there to be weakness today, and we've seen that. Vedanta, Hindalco, Tata Steel are amongst the commodity names that have been weak, and amongst the heavyweights, I think you have to keep in mind HDFC is one of the key stocks that has been beaten down in the session today as well. So financials looking slightly wobbly in the large cap space. What about the broader markets, Agam?
Well, some concerns certainly coming through, and I'm going to take you through some of those stocks which have seen some sharp moves, but I'll start off with those which are advancing in trade, some of the gainers. Let's start off with HDIL, and HDIL has had a good day of trade. It is advancing right now and it's moving up, and well, it seems like it's going to close at day's highs at this point in time, considering we're seeing it move by quite a margin, up as much as nearly 10% right now. That's followed by Balkrishna Industries. Let's pull that up as well, and that has also had a very good day of trade. That's up around 4.5% right now. That's currently near the 1400 mark, and that's also advancing. It's also, well, it's slightly close near day's highs. The other stock which is nearing the 1400 mark is United Breweries. That's up as much as 16%. It's actually up above the 1400 mark now. So in the last few minutes it has edged even higher, also likely to close at day's highs. That's up as much as 6%. So strength there. And Jet Airways, of course, which has seen a little bit of a recovery today, and that's up as much as 6.5%. Some strength coming through on an intraday basis, also likely to close at an intraday high. Let's talk about some of those losers, and Reliance Communication right at the list, right at the top. And you know, it's actually right at the top of the list of the Nifty 500 losers as well. That's down as much as 10%. We've seen weakness in Gen Irrigation too. That's also, well, seen a decline by as much as 9%. And Soba is the other one from the realty space, which is showing weakness right now, down by as much as 6%. So these are just some of the stocks which are bearing down the broader markets, Neeraj.
Well, so that's the long and short of what the markets have done today. Let's bring up, as we shut shop, let's bring up how the picture overall looked like. So 0.5% downtick for the Nifty Bank, weighing in on the other bourses too. The market breadth should be interesting because for a better part of the day we were flattish, and for better part of the day the market breadth was even Steven Sagam, but a yawning gap towards the close, and 1:2 in favor of the declines.
Yeah, this is exactly what we were talking about and addressing just some time ago. But let's also pull up your turnovers and see. Of course, the turnovers will be high because we did have the Bank Nifty options expire today, and that's the reason why you're looking at 17, a little less than 18 lakh crores on the NSE F&O segment. But the cash market segment, turnovers are not very low either. 36,000 crores with BSE and NSE together, and well, we've certainly had a big churn today, and a likelihood that we've had a higher participation from foreign institutional investors as compared to what we've seen in the previous few days as well. Of course, we'll await the FII DI numbers later on today, and the gross numbers specifically, not necessarily the net numbers, but the gross numbers will tell you their participation of how that's panned out today.
Yeah, then lastly, the contributors, HDFC and Kotak, I reckon. Yep, HDFC, Kotak, Reliance, HDFC Bank, so the heavies pile on the losses, losing side once again. This is the second time in the last 3 days, Agam, that the same list of stocks are correcting and putting in pressure on the index.
Right, it is essentially HDFC and HDFC Bank. Those twins have consistently showed up in those which are bearing down on the indices over the previous couple of days.
Yeah, so it looks slightly wobbly. Final thoughts from our experts then. Abhijit, Phatak, the HDFC twins, lackluster years, but bearing down on the banks and the financial indices, and thereby on the Nifty too. What do the charts suggest here?
Yeah, they led the rally for over the last few months. So they are taking a pause, they are correcting. So they are not at bearish, definitely. And even the market is not at bearish. So they are just giving a correction for the big move they have given in the past 6 months. So maybe another 5% or so, and then I think they should resume their up move.
Okay, Hadrien, Nifty at 11,385. Your closing thoughts?
Yeah, so nothing has changed as far as the overall scenario for Nifty is concerned. So I'll be waiting eagerly for the 11,350 support zone, and we'll take a call around those levels whether to go long or not. So I'll be waiting for the 11,350, which according to me is a very important support zone where I would consider going long. So that would be the Nifty strategy from my end.
All right, Hadrien as well as Abhijit, thank you so much, gentlemen, for joining in today and giving us your thoughts. Really appreciate your time. Good having you as always. And from me and Agam and the team that put this show together, thank you so much for watching. But stay tuned. The Market Wrap with Agam Vakil coming up next.